What's up, everyone? Good morning. Good morning. Happy Thursday. Happy Thursday, everyone. Oh, man, I'm so happy to be here today. Not going to lie, a little out of my comfort zone, but I think that what I'm going to talk about today is going to be super helpful for a lot of you, especially those who are doing multifamily at the moment, because when we started doing this a couple of months ago, we had no idea what we were doing. We had no idea what we were doing. And I think, I was talking to someone the other day and they were like, they went to this meetup. And in the meetup, hey, good morning, Hugh. How are you? What's up, KJ, Joseph, Carolyn, Myron, Peggy? How are you? Aldo, Robert. Thanks for you guys joining in this morning. I know it's a little early, but thank you so much. But I was talking to someone the other day about a meetup, and they said they went to a meetup. And what I thought was interesting was at that meetup, it was almost as if everyone there was sizing you up. And what I mean by that is they wouldn't even talk to you unless you had done anything in multifamily. Like if you haven't closed a deal, they wouldn't even talk to you. They wouldn't even take you seriously. They'd be like, okay, moving on to the next person. What do you do? And so that got me thinking because we were in that position too when we first started. We were like, how, you know, how can we do a deal when we don't have any money? We don't have any credentials. Nobody knows who we are. We don't even know what to do. What's up, Ryan? You know what I mean? It's like how do you even get started when you don't have any resources or people backing you up? You don't have any money, and all you hear is multifamily is the best thing to do. And then you look at these deals, and they're multi-million dollar deals, right? Because we came from the single family space, and for us, we were wholesaling, fixing and flipping. What's up, Joel? Buy and hold, these types of things, and we came from a single family space. So Felix, what's going on, brother? Um, we came from a single family space, and purchase prices and for us were like averaging around 250,000 to 300,000 maybe. And with that being said, when we got into multifamily, when we looked at our first deal, I think my very first one I looked at was about 5.5 million. And back then, guys, that really tripped me up because I was like, wow, this is my first multi-million dollar deal that I'm taking a look at. And I ended up working on that deal for a very, very long time and got invested in it, like put a lot of time and effort underwriting. And it was scary. It was super scary. I mean, 5.5 million, a lot of you guys in the chat who are with me, you know that 5.5 isn't, it's nothing, right? It's just a number, especially if you've been doing this for a while. 5.5 is pretty low. But for us, when we first started, 5.5 million was a lot of money. At least we thought. And so that was scary. So the reason why I'm like the team is doing this for you guys is so that whenever you guys start doing deals, don't feel like you can't reach out to people, especially us. That's what we're doing this for. We're adding value to you guys so you guys can go arm yourself with the right knowledge and take action and know that that you guys have resources with us to help you guys close a deal. Like that's what we want. We want to help out those who are starting off and are taking action. They're creating problems and they're bringing it to someone like us. It doesn't have to be us, guys. It can be anybody, but someone like us, so we can in turn help those people because we know what it was like being in your shoes, not being able to, not knowing where to start. So that's why we're doing this. And today I'm going to talk about something a little bit more advanced than what we typically talk about. Like we always go about like the basics and brokers, but today I'm going to talk about due diligence and what the process looks like. So this is going to be a little bit more advanced, and some of you guys have been following for a while, like Joel, Ryan, and so you guys know sort of the process before you do all that, right? Like before you even get to the due diligence, meaning that you're already under contract. And so this is a little bit more advanced. What I'm going to talk about is experiences that we've done. So, for example, our case study that we recently did in Tennessee and what that due diligence looked for us and other pieces that you're going to need to be able to do that as well. Hey KJ, thank you. See you in the chat. Peggy, what's going on? Yeah, no, seriously. That's exactly why I'm doing this, Peggy, is because I'm here to really help people out, and not just me. The whole team feels the same way. Is we want to be able to help you guys out. We're not by far the experts. We are learning as we're going, but we're sharing our journey and recording it so that you guys can see how we started. No money, don't have millions in the bank, even till today. Don't have millions in the bank at the moment. Um, but I'm here to tell you that you guys can also do it. You don't have to have the money. You just have to be able to take action and go find a deal. Once you find a deal, bring it to someone who has experience like us or anybody. It doesn't have to be us, and they will help you get it across the finish line. And that's what we did. We were brought 2 deals at the beginning. The first one we closed 30 units, and we helped them get it across the finish line. And then the second deal was brought, and same thing, we helped them get it across the finish line. But that one was a little bit more. We had more experience, so we had kind of a little bit more of what we knew what we were doing. But anyway, let's talk about the due diligence period. Yeah, thanks, KJ. Not yet. We'll talk about the due diligence period, guys. I think it's important for you guys to take a note that prior to your due diligence, prior to you getting into your purchase and sell agreement and negotiating what your due diligence period is going to be and your closing, you need to be able to do a few things before that. And I would recommend that you do that even now before you even get a deal. This is what I recommend that you guys do. And I hope you're taking notes, because I have a bunch of stuff down here that I jotted down that if you guys are watching, this will be helpful for you to get started now, especially if you're the one in your team that's taking the role of deal structure or the due diligence period or deal sourcing, because this is going to be hand in hand to what you do in underwriting too. If you're doing the underwriting on your team, you're going to be heavily involved in this. The whole team will be, but there's got to be one person that takes lead of the due diligence. For sure. Thank you, Diego. Yorman, thank you so much. So a few things that I jotted down that you should do before your due diligence period, meaning that if you have a deal that you are getting close, that the numbers are working, that your asking price or your offer is close to their asking price. Maybe you've already submitted an LOI and it looks promising, and you think you're going to get this, you think you're going to get awarded the deal. Then these are the things that you should be doing before you get into the purchase and sell agreement. And the number one thing that I would say here, I'm going to start off with number one, is property management companies. For us specifically, the reason why we look for property management companies is because we want to be able to scale our business. We don't want to be the ones taking on a project where we're self-managing that property and now we have a job. For example, for us particularly, we look for, at least this was before, we look for 40 units and above. Now we're at 100 units and above. We don't look at anything under unless it's creative or seller finance or a combination of both. But the reason why we stick to 40 and above was because we were able to justify the expense that comes with putting a property management company in place. And if we had anything under 40 units, then that meant that we were going to be the ones managing the property. We don't want to be managing the property, guys. I promise you, KJ, Joseph, Carolyn Meyer, myself, Ione, we don't want to be the ones answering the phone call if someone's toilet breaks down. We don't want to do that. We want to be able to scale and keep adding more to our portfolio. And I believe that if we were to start anything smaller than that, we would be taking on a full-time job and we would not be able to scale. We'd be a slave of that property. That's why we stick to our buy box. So for us, it's important for us to interview property management companies and have the right property management company in place. So I would recommend, again, this is number one, property management company. We recommend that you interview a minimum of 3 to 5 property management companies. they have to be local to that area too. Local to the area because you want them to know that area as well. You want to be able to ask them questions about that specific area and know that they're knowledgeable in that area. You also want to ask, what type of asset class do they typically manage? Because if you have a class A asset that you're potentially looking at putting under contract, or you're in your due diligence period, and that property management company doesn't manage any class A properties, maybe they just manage class C properties, then it's kind of like apples to oranges. How are you going to expect them to manage a class A when they've never done a class A property? So I would say ask them what type of asset management class that they manage currently. And that's a crucial question to ask, guys. You have to ask that question when you're interviewing property management companies. Another thing that we ask, and I recommend that you guys ask the same, is what type of or how many properties do they manage at the moment? We typically don't look at any property management companies that don't have 1,000 units under management minimum, because we want to make sure that these guys are capable of doing their job. And then we're going to go look at Google reviews on those properties that they're managing. So you have to make sure that you screen them well. So the property management company is something you should be doing beforehand. Even right now, if you have a chance to do that now, I would recommend you start being proactive instead of waiting till the last minute. It's just going to make it much more stressful. The second thing that I recommend, I hope you guys are writing this down. The second thing is attorneys. This is one of the most important things that you need during your due diligence period. And even before, that's why I'm telling you, if you guys can prepare beforehand, do this now, because this is what we had to do. Specifically me and Myron, who are on the team, we're doing this. So attorneys are so important. Recommend that you also interview, or actually before interview, get a referral. The best way to talk to an attorney and quickly get these attorney under your belt is to go get a referral. Someone who's doing business in that area or in that state that has, multifamily or whatever. Get a referral if you can. That'll be the best bet. But still interview some other ones just in case. But if you don't have a referral, interview 3 to 5 attorneys and make sure that they have the following criteria, at least for us, that this works. That they're local to this state. That they're local to the state. Wherever that property is, you want them to be in that state because you want them to have that local knowledge of the laws in that state. Also, sorry, I'm reading my notes here, but they ensure that they are real estate attorneys. If you're interviewing attorneys and you don't have any, make sure that they're real estate attorneys, because what you're going to want is for someone to review your contracts. What's up, Ryan? KJ, thank you. Thank you. Yeah, guys, put some fires in the chat if you think this is valuable. And again, you should be taking notes. I recommend you should be taking notes because this saved us so much time and it cost us so much money. And we're giving this to you guys for free. Attorneys. Again, I'm on number 2, attorneys. And this is prior to you even get to the due diligence period, guys. What's up, Ben? This is prior to you even getting to the due diligence period to be proactive. Go interview attorneys. Make sure they're real estate attorneys. Make sure that they can help you with the negotiations or reviewing your contracts, because it's not like single family, guys. There's really, I do not recommend you do your own contracts at all, especially if you're doing the higher end stuff. I do not recommend you doing your own contracts. Go get an attorney, have that delegated to the attorney. Make sure they're knowledgeable in real estate. And yes, if you're going to be syndicating, I think I saw this from Mary Jade. Yes, if you are going to be syndicating this deal, make sure that the attorney also does syndication and they know the filings and what it all has to entail with the private placement memorandums and whatever filing you're going to do, whether it's 506B, 506C. I'm not an attorney. I'm not a CPA. I'm not a financial advisor. Go and seek out, do your own due diligence, and ask your attorney for these specific questions, because they're going to be key, especially if you're doing that stuff. Number 3, insurance, guys. This is so important. Go get an insurance quote. And I recommend, again, 3 to 5 insurance quotes, because we got a couple and each and every single one of them varied big time between what they covered, the deductible, and the annual, the rate. So you want to go get the insurance company or the insurance quotes at least 3 to 5, same thing, because this could make or break the deal as well. If you were budgeting X amount in your underwriting and the insurance comes back with a whole completely new number, it's super high, it could kill the deal. So make sure you do this beforehand too, is go and create those relationships with your insurance companies. Go get that information. And then another one super important, probably one of the most important alongside with the attorney on this one, is a lender. And I think a lot of you guys already know this. The lender is super important in this transaction, especially if you're doing it the traditional way, right? Conventional method, whether it's a bridge or whatever product you're trying to do with the lender. It is crucial for you to have a lender or 2 or 3 or 4 that you've already talked to and established and created relationships with, because they're going to be guiding you through this process too. And you know, the best part about multifamily and lenders, guys, the lenders don't want you to fail. It's not in their interest for you to fail. They won't even loan or approve you for anything if they don't think the deal is a deal. So it's not like single family where you just have good credit, you get a down payment, and boom, they don't even care if you make the payment on time, or if you can't make the payment, then you just go into foreclosure. These guys will help you. They will help you and make sure and ensure, they'll underwrite it too. They'll ensure that this deal actually makes sense before they go out and give you a commercial loan. So it is crucial for you guys to go get those lender relationships and start doing this, because you're going to need to know from the lender too, or before you even do that, if you don't have a lender that you talk to right now, if you're going to interview some lenders, here's a few questions I would ask. I would ask them, what type of loan products do they offer? Right? What type of loan products do they offer? Second, I would ask the lender, how many loans have they done? Specifically them or the company. And third, I would ask them, what type of products or what type of real estate do they like to loan on? Because there's lenders that'll loan, yes, they will do real estate, but maybe they like to do industrial, maybe they like to do residential, or maybe they like to do commercial, like retail stuff, right? And maybe they are not necessarily focused on multifamily apartments, specifically commercial multifamily. And you want to know that up front, because you don't want to get to the point where you're going under due diligence and you thought you had a lender in place, but they don't loan on that specific, either in that market, or they don't loan on that specific real estate that you're looking at. So the lenders, and I see you, Mary Jane, I know you asked, do you use lenders local to the properties? You can. We specifically work with lenders who are nationwide, but we've also, here's the thing, Mary, we always ask for referrals on a lender. So what I mean by that is we have people that we work with, who we partner up with, who have used a specific lender before for multifamily. And we ask them, hey, what's the lender that you used? And they give us that referral, and then we talk to them. Of course, we're still going to interview them, right? We're not just going to, you want to trust but verify for sure. But we talk to them, and our specific lenders are nationwide. So again, ask for a referral if you're looking for a lender. If not, then go and interview some lenders, but ask those specific questions, guys. It's important that you ask those questions. And then this is all before. I'm telling you guys, this is all before. You should be doing this before. Like, this will help you so much. Like, don't wait till the last minute. Do not wait. And I'll go over them high level again, because I know there's a few people who joined. But the first thing I recommend before you even do the due diligence is go and interview property management companies. Second, go and interview and talk to attorneys. And third, sorry, there's 4 actually. The third one is insurance. Go and start talking to people who so you can start getting your insurance quotes once you get into due diligence. And then fourth is the lender. So once you're in the due diligence period, meaning that you've already signed the purchase and sale agreement, now you're under due diligence. And typically your due diligence period or inspection period, whatever you want to call it, it's similar to single family. If you're in single family, you have an inspection period. In multifamily, it's called the due diligence period. And your typical inspection period or due diligence period is anywhere from 30 days and can be all the way up to 90 days or more, depending on what you negotiate. And then there's a closing period after that. But I'm going to stick to the due diligence period for now. We can talk about closing on another one. But the due diligence period here is where you do all of your inspections and everything and anything. I mean, this is the period where you guys have time to get into every single unit and inspect everything. Every single unit and inspect everything. You're going to want to order some reports too, and you're going to want to do an inspection report professionally done. Okay, I'm not saying you go in there and do it yourself. No, that's horrible, especially if you have over 100 units. You're going to be burnt out over on the 20th unit. You're going to be burnt out. So what you're going to do during this period is, if you're being proactive, you have all these people lined up already: your attorney, your insurance people, and all the stuff that I just mentioned, property management and all that stuff. But I recommend that you do a commercial inspection for every single, for your inspection on this one. And what that means is you'll have someone professionally go out there and inspect every single unit. That's what they do. They're called the commercial inspectors. That's it. They go in there every single unit and they jot down and they give you an inspection report when they're done. They're pretty fast at it too. They normally get it within a day or two and they're done, depending on the amount of units. I recommend you get an inspection done for sure. When you sign your purchase and sale agreement, EMD is crucial. Earnest money deposit. It's typically 1% of the purchase price. And depending on what you negotiate, specifically for us, we put down EMD 1% and we do not make it go hard. And what I mean by that is there's purchase and sale agreements that say that the earnest money deposit will go hard, whether it's day one or in a couple of days. And what that means is if it goes hard, it's non-refundable. So in our purchase and sale agreements, and when we negotiate, we want to make sure that our EMD is not going to be hard or is going to be refundable, because we want to be able to protect ourselves in our due diligence period. Now, unless the deal's really hot, like super good, then maybe an earnest money deposit that goes hard might be okay, contingent on a few things, and we can talk about that in another Zoom, in order for you to still protect yourself. But EMD is going to be crucial, because typically it's, depending on what you negotiate, anywhere from 3 to 5 days after you sign the purchase and sale agreement, it has to be wired to the title company. So you have to make sure you have that beforehand too. Now, this is something that we figured out too. Like, it's just like single family. You do need an EMD, so you need to put money up front to deposit. But when you're talking about multifamily, right? Let's say you're talking about a $100 million deal, right? 1% of that is a lot, right? If it's 100 million, hopefully you guys are doing $100 million deals, but if it's 100 million, you have to put down $1 million for EMD, right? So you have to be prepared for your EMD. It's not like your typical single family $1,000 EMD, $5,000 EMD, maybe $20,000 EMD. This is going to be 1% of the purchase price of a multi-million-dollar deal. You have to make sure that the EMD is ready for you to deposit. So that might be something that you have to go and raise if you're capital raiser in your team. The other thing that you need to know too, when you're in your due diligence period, is that there are other upfront costs as well. Like, you're going to have to figure out the legal part. The attorneys aren't cheap, guys. Attorneys ask for their money up front. Unless you have a really good relationship with this attorney, you've done a lot of deals or transactions with this attorney, a lot of times they'll ask for their payment up front. So you have to be prepared for that payment too. Again, I'm not an attorney. I don't know what rates are, but we normally budget anywhere from $15,000 to like $20,000 for the attorneys up front. And believe me, guys, I know it sounds like a lot. Like, dang, 15,000, that's a lot. But the amount of peace of mind that you're going to get throughout the whole process and everything that they do, it is totally worth it. Especially if you're syndicating, you've got to be protected on this deal. You have to. You cannot skip these corners. You cannot, guys. It's just like if you do a luxury fix and flip. Like, when you do a luxury fix and flip, for those flippers out there on residential, You cannot skip out on the materials that you buy. It's a luxury flip, so you have to make sure you do it right. Same thing with this over here on multifamily. Your due diligence and your legal has to be soundproof. Like, it has to be. Don't skip out on that expense. You want to make sure that the legal, but a budget for that, it does have to be upfront. And then during the due diligence period, this is where you're going to be raising capital for you guys who are in charge of raising capital in your team. This is what you're going to have to do during this time. Preferably, you're doing it before. Again, I've told you, if you guys can do this all beforehand, that's even better. It's just much less stressful. But this is going to be the time where you're going to talk to your attorney, work hand in hand with them to make sure that they are doing the proper filing for the syndication. If you're going to be doing the syndication, again, I'm not an attorney, consult your own attorney. Whether it's a 506B or 506C, whatever that filing may be, you determine that with your attorney. The organizational structure for your syndication and what that's going to look like, the bank accounts that get opened, the private placement memorandums that your attorney is going to handle on all the filings and everything that comes with that. That's what I'm saying, guys. Like, I'm not an attorney myself. I'm not going to explain the nitty and gritty when it comes to that, but your attorney is the one who's going to be taking care of this. That's their job. That's why you want the attorney in there. So you're going to be the one, if you're going to be the one raising capital, you're going to work very closely with the attorney when this part happens. And then you're going to start raising that capital and allot yourself some time, because it doesn't happen like that. Like, when you start the filing process with your attorney, it's not going to be instant. You're going to have to allot for 1 to 2 weeks before all the filings and everything can get opened, before you can start going and raising capital and opening all the accounts and everything like that. Like, you have to be prepared for that too. It takes time for the filing to be done. And the last thing I would say is communication is key during your due diligence period, guys. Communication is so crucial during this period. I mean, you as the operators are going to be acting as a transaction coordinator, essentially, during this process, because the last thing I want to talk about that you have to have in the due diligence process is a title company. Depending on what state you're in, right? There's title attorneys that you work with. But for us, we're in Texas, and the deal we closed in Tennessee used title companies. So the title company is going to be extremely crucial as well. You want a title company that can perform, because we've closed a deal with a couple of title companies that don't necessarily have the capability or are kind of mom and pop, and it just made the process a lot harder than a title company that would have been a lot more versed in this, or has able to take on the volume for it. So the title company is crucial. And the last thing I'm going to leave you off with, guys, is the communication. It's so key. You as the operators are going to have to communicate with the lender. Super crucial throughout the entire time, guys. You want to stay in communication with the lender. You don't want any hiccups or surprises. If you guys have ever done a deal with a lender before, you guys know what I'm talking about. It's typically the last week or the day before, 2 days before closing, something always happens. So you want to be proactive. That's typically because there's no communication going on. You want to be proactive with your lender. Have that communication open. The second one that you should be communicating with, the second person, is the broker. The broker who's in charge of this deal, or if you're going through your buyer's broker, this is what they get paid to do, guys. This is why they get their commissions, because they're busting their butt getting everything done as well. You're working hand in hand with the broker because they're going to be talking to the same people that you are as well. Or if not, they're going to be asking you for updates because they want to get that update to the seller. Brokers are super key when you're talking to these people in the due diligence period. They're going to be helping you. They want this deal to close because they don't get paid until this deal closes. So they want to help you. So the broker is going to be crucial. Communication with your attorney. Every day you should be talking to your attorney. They should be at the point where they're looking at their phone and they're probably yelling at you, or they don't want to talk to you. Like, that's how much communication you should have with your attorney. Check in with them constantly, because it's kind of like your title company, right? That's another one you're going to communicate with. But if you're not on top of things, then it's easy for things to fall under the cracks. super easy to fall under the cracks, man. And one miscommunication can mean a delay for another week or two for your deal. So attorney communication is crucial, and title communication is crucial. Don't assume that the title is communicating with your attorney or with the broker or with whatever. You have to stay on top of it. Talk to the title company and make sure that they have all the information they need and relay all the information. Even if you're copied on the emails can get lost too. So you have to stay on top of it. And communication with your investors, that's number 5. Communication with your investors. If you're syndicating this deal, you have to communicate with your investors. Let them know everything that's going on. Every single little thing. Unless you've already got a great relationship with your investors and you've done deals before, everything is all good. They know you can operate whatever. But if this is your first deal, you have to communicate with your investors daily. You want to take care of them. They're one of the most important people on your team that you want to take care of, your investors. And the last thing that I would leave you guys off with is all this information I gave you right now. During the due diligence period, you're still going to have to underwrite the deal consistently. Whatever comes in, new insurance quote came in, boom, that goes in the underwriting. The attorney fees came in, they're finalized, boom, that goes in the underwriting. The lender fees are here now that goes in the underwriting. The property management terms or the property management company fees are in, you know what they charge now, that goes in the underwriting. So guys, make sure that all this stuff you're plugging into your analyzer and underwriting, stress testing the underwriting as well for worst case scenarios or anything you can think of. That's what our underwriters do. And I would even recommend, if you're new and you're not very confident in your underwriting, to go and get it outsourced by someone who's a professional and compare apples to apples. Yes, you're also going to have to pay for their service, but it is so crucial and so important. Peace of mind to know that you have different opinions or different angles or whatever you want to call it. I wouldn't even do just one. I would do 2 or 3 and compare, because you can also pick their brain once you paid for their service and be like, why do you think this, or what happened this, or blah, blah, blah. Or maybe there's something that you didn't see, or maybe there's a state law like a franchise tax that you had no idea about, and they do. So go get if you're not comfortable with your underwriting, go get it underwritten by someone that you trust, someone who's doing these deals, someone who maybe is a professional, because that's what we did. We made sure, and we're glad to say that when we did that, our underwriting was spot on with theirs. Spot on. The only thing that was different was they budgeted for the franchise tax that we had no idea, but luckily the franchise tax didn't kill the deal. It was still a great deal. But that's what I'm saying, is get a different set of eyes on it. And that's because they went around all of our team, but then we like, hey, let's go get it outsourced and see what happens. And that's what we did. And we're so happy we did that. We worth every penny and more. We were able to communicate with them and talk to them and strategize with them too. So the underwriting is important throughout this entire process. It's going to keep getting updated, and you're going to keep finding different things that you're going to need to adjust. Those are the most important things. I'll go over them real quick again. This is the stuff that you need to do beforehand. Thanks, guys. I see you guys in the chat. KJ, Toy, what's up? Jason, how's it going, man? Ben, thanks, brother. I'm going to go through these real quick. These are things that you should be doing before, or if you're under the due diligence period, you should be doing it yesterday. But first is property management company. Second, attorneys. Third, insurance. Fourth, lenders. You should have all that stuff prior to doing this. And if you're the one raising capital, you're the one raising capital even before you get the deal. So guys, don't forget, communication is key throughout the whole thing. Due diligence period, you're doing your inspections. And during this time, guys, this is the time also during your due diligence where if you find something in your inspection period, whether it's like a $1 million plumbing expense that no one saw, you are going to have to either renegotiate or don't be afraid to walk away from the deal. Don't be afraid to walk away from the deal, guys. We walked the deal. We almost put it under contract, but after doing an inspection prior to putting it under contract, we found out that there was $1 million worth of plumbing issues. And that we knew for sure then that that wasn't a deal for us, so we had to walk away. This is what the due diligence period is for. It's your inspection period. It's for you to say, is this a deal or is this not a deal? This is where you do all the deep dive. Nothing is out of question. You are allowed to ask questions. You are allowed to be in these units, and you are allowed to do any inspection that you want to make sure that you are covered and protected. And don't be afraid that if something comes up, that you renegotiate or walk away. Cool, guys. If you guys found this helpful, please let us know. Put it in the Facebook group. Make a post. Just let us know the feedback. Obviously, we're going to go more into detail in a Zoom for something like this, but hopefully this guy's helped you guys so much, or helped you guys out a lot is what I meant to say. But again, let us know, give us feedback, what else you would like to hear from us. But we're going to be doing something like this more often, where we're doing individual like lives or podcasts, so you guys can know a little bit more about what the process looks like and what we do specifically in our team. Margaret, I do see your question. If you are wholesaling, you have less steps, correct? If you're wholesaling multifamily, this is going to be it's not going to be a simple answer, Margaret. For me, if I'm wholesaling a property, I'm going to be involved every step of the way to make sure that I help and provide value to the potential buyers who are taking over, because those could be potential partners in the future. Or I want to justify the amount of work for the fee that I'm going to get paid for. Everything is different in multifamily, Margaret. You can't just shoot details to someone and expect to be paid for a deal, which I see a lot. And I'm not going to go into detail. That's for another Zoom. But as a wholesaler, if you're going to wholesale this, you're going to be much more involved than you would be in a single family transaction, and it takes longer. Couple of questions. I see Jabs. What's up, Jabs? Are there going to be times where brokers don't allow you to walk all the units? Yes, there's times where the brokers don't allow you to walk all the units, especially during your initial walkthrough. They will not allow you to walk every single unit. You're just going to get the high level, and maybe you can tour 1 or 2 vacant units, or maybe 1 down unit if they let you see it. But during your due diligence period, you should be able to walk all units. If they're not allowing you to walk a unit in your due diligence period, that's a red flag. In your due diligence period, it's fair, and it should be stated in your contract that allows you to walk every single unit, even if it's leased or not. Where can you find professional underwriters? Right here. Reach out to Joseph and Ione, Mary. They're part of the team. They're really great at underwriting. Reach out to them. That's what I would do first. Guys, I hope that helped out. I'm going to call it here. I just wanted to give you guys a little bit of feedback and a little bit of what we've done, and hopefully that was valuable to you guys. If you guys have any questions, again, let us know in our Facebook group, or reach out to us. My Instagram handle is right there. Instagram handle is right there, guys. Follow me, follow us, and shoot us a DM on Instagram if you have any questions, or follow us on our Facebook group, the Multifamily $1 Million Upside. Let me put it in the chat real quick for you guys. And we are definitely going to be doing some more stuff in the future for everyone here. So if you guys are not part of the Facebook group, go in there, shout us out, let us know what you thought, what you're thinking, if you need help, and let's get your first deal across the finish line, guys. We want to help. We want to be there with you guys. Awesome. Thank you, everyone. We will see you guys next time.